It's very clear that we are in this historical inflection point where macro and micro analysis, technological forces, blockchain, it's all converging, and it's creating this massive fundamental shift in how value is stored, how value is moved, how we transact across the globe. And I think into 2026, a lot of this is going to become very visible. Also important to note that we do see a lot of financial institutions quietly behind the scenes running into real resources, commodities. And I think it's also a geopolitical lever. And you could take Venezuela for an example of that. Bitcoin and just crypto overall is decoupling from the stock market, right? Essentially what that means is you're having a decoupling of an entire new asset class that no longer relies on debt or fiat-based instruments. And that's where it gets very interesting, because if you look a bit closely at this and how the entire ecosystem is evolving, I think when real-world commodities, that's gold, silver, platinum, other assets, oil too, when you combine that with blockchain, the utility eventually, with regulation, is going to become independent of debt-based pricing mechanisms. And that's when the whole game is, it changes the dynamics of the conversation entirely. So I'm trying to think a little bit bigger about this, and going into 2026, I think a lot of this is going to become very clear. And if I'm not mistaken, the Clarity Act, you're going to have clarity in January sometime. So we'll see how that plays out. A few things to note real quick. What you see happening in precious metals is a signal, right? It's a signal for urgency. The all-time high of gold was actually 44.85. All right. So everyone keeps saying it broke 400, but still very close. The fact that it's breaking new all-time highs, that's a signal. Okay, it's anticipating a lot of money printing coming into 2026, something we talked about last week. There is no other alternative. It's the QE policy that you say is really theatrics. It's the Treasury who's making all the calls behind the scenes. And there's actually a merging between the central banks and the Treasury Department, and you have a massive consolidation phase happening behind the scenes. So regardless, this new framework that we've talked about for many years in this ecosystem is certainly going to have an intersection between commodities and digital infrastructure. That's what blockchain does. It opens up the door to allow this to become a reality. Okay, anything is possible, really. It's all about the governance behind the technology. Now, even silver is experiencing a massive breakout, and it's breaking I think a 75-year trend. You're seeing, you're going to see major historic rallies. Platinum also, it's very overlooked. I was told by Rick Rule to get in. That's when I shouted out here on this platform saying Rick Rule shared that insight with me. He was correct. It did shoot up. And if you look at the historical data, platinum has actually outperformed gold. So I'm just saying it has a lot of leg room to run. And again, looking at the broader ecosystem of what's happening in the world, there's a pattern that we're seeing from every historical reset around the financial system. And that's simply when confidence in the debt-based systems or fiat currencies begins to fail. And we're already seeing the cracks. Capital is going to flee into tangible stores of value. And right now, this is the phase that we're entering. So it's still early. Don't ever think like, hey, is the gold price too high? Look at how weak your currencies are. And I think, finally, in this environment, investors that truly understand the intersection of the monetary value, monetary metals, and the digital currencies, they're really going to be the ones positioning themselves at the forefront for 2026 and beyond. Gold and silver are going to be some sort of foundation as monetary instruments. They have been historically, and that's where you're going to see scarcity and long-term intrinsic value play together. I think XRP and XLM are going to provide some operational layer, and that's a whole different discussion, because we're talking about bridging the physical world with the digital world. Now, once we're in the digital world, you're going to need some P2P mechanism for in that infrastructure. That's XLM. So there is, again, this complementary relationship. If you know what you're doing and positioning yourself accordingly, you need to have real tangible assets. Then you want to have some skin in the game as far as the exposure to the digital layers that are already integrated into the system. When people look at the dollar, they don't think about dollar liquidity. And that's another thing that doesn't really get reported on much, but it's the fact that dollar liquidity is plunging, which means essentially that there's not enough money in the system for the government to even finance itself. So no matter how much they print, we already know the debt is out of control, but that does create all these other systemic issues into the larger geopolitical landscape. And that's really the most critical aspect here, is dollar liquidity when you start to look at these currency cycles. And if we bridge it now to what Ripple has been doing, RippleNet, their on-demand liquidity, what do? They solve this problem by using XRP as a neutral bridge asset. So instead of holding those pre-funded accounts around the world in dollars, as dollar liquidity is plunging, you have an alternative solution, because the bank then can convert its local currency into XRP and send it across the ledger in seconds and convert it into that destination. So again, no pre-funding, that's real-time money, no middlemen, no exposure to counterparty risk, which is dollar volatility, etc., etc. The Clarity Act, that's the real turning point, no pun intended, in the US digital asset regulatory environment ecosystem for XRP, because this is going to distinguish, like we talked about last week, strategic assets from securities. And I think, again, Ripple and Stellar are at the forefront of all this. Their legislation is really going to be a liberation mechanism, you can say, because under the framework, I know for a fact also, and I'm trying to understand this a bit better, but if XRP wants to be treated as a global reserve asset, we talked about this last week, how they have to keep some of their XRP holdings below a specific percentage so they don't trigger the securities classification, right? We did say that's one of the key drivers for global scalability for XRP. So it's going to be very interesting to see how this plays out. But I think once Ripple's holdings does fall under the Clarity Act's compliance threshold, that's when institutional adoption essentially is going to greenlight the whole process and potentially create that supply shock people keep talking about. There's just so many other mechanisms how this could unfold, or the convergence of all of it at once. The CBDC, it's real. It's really coming together. You could sugarcoat it all you'd like, and it could be disguised as a stable coin, which we've proven before. It's actually in the Genius Act if you really look into it. Most people don't read the Genius Act. They just look at the headline about it and say, hey, good for us. We just greenlighted the whole process. This is going to bring institutional adoption. Sure, we've explained that angle too. But you got to factor in the fact that most people out there are not participating in this transition. They are going to be subjects to it, okay? Whether you call it a universal basic income or a CBDC, the groundwork has been laid out, and I've been reporting this with you guys for many years now. And we get attacked by the Q guys. Keep saying it's not true. Trump is putting the deep state. I remember the bullshit, okay? I tried my best. And I've been attacked, excluded from documentaries just because I was telling people these are the facts. So it's the truth. There is going to be a lot of people that are going to fall into poverty because of these changes, because they haven't positioned themselves because of bad financial decisions. And it's not their fault necessarily. It's the fact that this beast system is debt-based, and debt-based is slavery. Okay, this goes so deep. So it's going to play out, and they're going to use war as a mechanism to get us there. I've been told that off record many times as well by a lot of the people I've had on the podcast who are, more informed than I am. So I think the digital rails are really a mechanism to lure people in the incentive of FOMO, fear of missing out, because of what has transpired with the Bitcoin narrative from the past. I've seen it with my own eyes, including Vindel and I. We were early victims to this in the beginning. We wanted to get in because we saw how much money people were making. There you go. But we decided to take time to do research into it. So I think it's inevitable, because you got to factor in the fact that most people are not going to have wealth. Ninja generation, as they call it. No income, no job, no assets. And that's really where this is going in the grand scheme of things. But we're not allowed to talk about that because we're going to get attacked by everyone here saying you're doom and gloom. I think the big picture is more important than anything now. And I think most people are still not going to understand this until it's too late, because everybody in this ecosystem, they're chasing yield, which is a joke when you factor in inflation and still realize that your yield that you're earning is denominated in freaking dollars.